Hello and good morning, folks. It's the last day of the week, and what can we say other than thank God it's Friday? An unusual week with surprising but not so effective updates from the central bank, but it seems the equity markets did enjoy it a bit. Currencies found a new range to trade in while the dollar strength continues. So, JK, there has been new lows seen for euro, new lows seen for GBP. Boris Johnson resigns as the prime minister. There's a lot of things happening. What do you have for us as an update?
Yes. So the currency market turmoil is not really impacting the stock markets. That is my observation straight away. At least yesterday was a good day across regions. Asia was in the green, then Europe picked up. Europe, in fact, inspired further rally in US market because the Norwegian government stepped in and halted, rather annulled the strike called by the oil sector workers strike. In case it had progressed, then it would have, if the strike had gone ahead, it would have impacted Europe even more. So Europe had lost heavily earlier in the week, and they made up yesterday, and that actually inspired a further rally in US. So US has the investors looking at things in two ways. The hawkish awareness from various Fed members, including Valor and Bullard yesterday. Some investors are looking at it as if the US central bank would get a handle on the inflation soon enough and avoid a much larger problem for the economy. And there's other section of the investor who are looking at a possible recession, and therefore they are uh, skeptical about holding stocks. But yesterday was a good day. I think again another bear market rally, I would call it, because I don't think this is a turnaround for the stock market. There's a lot to contend with. The Fed is not even through with half of the rate hikes, and financial conditions are tightening. Ukraine war is on, and the oil price is far from being settled. So take it at a time, one day at a time. So yesterday was a good day. We don't know what will be today because we have the jobs report ahead today, a monthly jobs report. In fact, the June report is which is to be released at 6 p.m. India time. Expects 268,000 new jobs to be created versus 390,000 last month, while unemployment rate is seen steady at 3.6%. Of course, I will look more closely at the wage inflation that's expected to be steady at 0.3% month on month, while year on year is forecast to drop from 5.2 to 5%. But more importantly, coming at a time when the market is concerned about the potential implications of the rate rises amid the soaring inflation, one should be watching it economic slowdown. And so even a strong report may be taken with a pinch of salt, as it could be seen as a near-term strength before the true effects of tightening financial conditions take hold. The recent Fed estimates, rather the statements, have indicated that their preference to rein on inflation is even at the cost of growth. Unfortunately, there is a strong chance that many view this release with a pessimistic slant, for any positive data could simply be passed off as a short-term strength before the true effects take hold. Also, while on the jobs report, I should also highlight the fact that the monthly ADP private jobs report, which we used to get 2 days before the non-farm payrolls, has been suspended for 2 months because there has been some comments about this statement, this data being not really truly indicative of the monthly jobs report. So the ADP is halting it for the time being, and they're planning it to make it a robust, high frequency view of the labor market and trajectory of economic growth. And they said that they will be targeting to start it from August 34, 2022. This just for the benefit of people who might be wondering why the ADP private jobs report was not published this month. And also, another interesting discussion now, now that the markets are mostly on hold and ahead of the key jobs report and then the inflation. There's an interesting point of discussion that I would like to highlight on the GDP in US, because GDP for all, including the final estimate, the second quarter GDP has been in the negative, for US. Sorry, the first quarter GDP. But there is a discussion which is going on saying that GDP may be in the negative, but the GDI is in the positive. So GDI is the gross domestic income. And these two numbers are not matching. And this is called as statistical discrepancy. In fact, Bullard also touched about this. And he says that while when you have 2.5 million jobs created, you cannot say that the economy has not become more productive. So that is his statement. And because of this discrepancy, these outputs have been giving conflicting views of the recent economic conditions. Probably this is something that the statistical departments or the government departments have come out with, just to highlight that you don't look at GDP but look at GDI. I immediately recall the statement of the Fed when inflation was rising. They started saying it is transitory and all that. Of course, they had to eat their own words later. So these are some sidelights about the markets. And of course, on the more specifics of the market, yields went higher yesterday because of the hawkish statements from the two Fed members. And they have recovered quite a bit from the earlier slump in the week. For the rupee, of course, the slew of measures announced by the government, which are intended to increase the flows, have not had any dramatic impact. We saw before below 79 immediately after the release of the news, and then again yesterday it started below 79, but once again very good demand just below 79, and including oil companies, and that has actually taken the rupee back above, back to around 79.20 yesterday. Even now it is trading around 79.15. The challenges for the rupee are multifold. Oil dropped, but again seems to be reducing support at 100. The flows have been negative. Trade deficit is still higher. All known factors. So you can't just have one news item or one official announcement based on which market is not taking a view that rupee will get strong. So that is the key. The market sentiment is not changing. So long as that is not changing, rupee's direction is not going to change. And most of all, when you are having euro racing towards parity, you cannot have dollar rupee going on the other way, and particularly when there are other challenges which I have mentioned. Therefore, rupee, I expect it to be range bound again with the 78, 80 and 79.30. Of course, 79.40 break would bring it to focus, or we'll get inch closer to 80 magical level. So that may have to wait for later in the month. And finally, I'm also keenly looking at various central banks, including UK, Europe, Japan. All these people are probably looking at the currency weakness, and because that is impacting their inflation. In UK, UK, the Johnson's resignation did not impact UK pound so much for two reasons, because this was well known. The news item was not well published before the event. So people far away from UK were not really aware, but definitely market had discounted this news, and that's why there was a short covering after the news came. The new PM will be chosen in September. That is what the news says. Probably there is some optimism that the new government will be able to manage the economy better. That is still hope. Maybe sterling will bide its time for the next move. In the meantime, one more member of the Bank of England once again said that it is better for Bank of England to see the effect of weakening pound on the inflation. So that's about the currencies. And finally, we did have some sad news today morning about Japanese Prime Minister, a former Japanese Prime Minister, Mr. Abe, being shot. He's been taken to hospital. So it's a very rare violence news from Japan, which I have heard. Hopefully, he will be fine, and it will not have much of an impact on the market as well. Yeah, thank you. Have a good weekend. Before that, we will have the jobs report in the evening. Thank you.
Okay, JK, quite an extensive one and lots of data points to look out for. But I really like the fact wherein you mentioned equities look to be decoupled with the kind of currency market turmoil we are seeing. So equity market people are still enjoying, I guess, and with the wage inflation expected to go down, it's kind of sad to see salaries and wages are not increasing, but the prices are. So I don't know, just on the humor side, but there was also an interesting set of statements by the Russian president. He mentions that the West has failed in their attempts to contain Russia, or this is start to the transition of a multipolar world. Now, these kind of statements are a bit strong on the side, just as the Russia-Ukraine war has been going on outstretched. So we'll see how things go ahead in the financial world with all these various sets of factors affecting it. We catch up again on Monday morning. That's it for today. Thank you, folks, for joining.